I'm Ian Castle, founder of Microcap Club, home to the best microcap stock pickers on the planet. Since 2011, our members have profiled over 1,300 microcap companies, with over 290 turning into multi-baggers. That's more than one big winner every single month for 14 years. If you share the passion for finding great companies early, before Wall Street and the institutions, Microcap Club is where you belong. Join us.
We got Dean Pernas from Pernas Research.
Hi, everyone. My name is Dean Pernas. I'm with Pernas Research, and I'm presenting today on Capstone Green Energy. Some disclosures: this is not financial advice, and we are shareholders in the company. So just a little bit about us. We are a high-conviction equity research firm, and we invest in companies with what we call strengthening motors. So to us, a motor is what drives the motion of a car. And for a company, a motor is what drives the future financials. So the motor is really the interplay between the internal and external elements. So do they have the right strategy and execution, and what do the evolution of the customers and competitors look like? So we really like to lift up the hood, see the health of the motor, is it growing stronger or weaker? And our sweet spot is typically companies whose motors are growing stronger, but the current financials don't reflect that. We also publish our track record on a quarterly basis. So Capstone Green Energy, we believe, is a multi-bagger, has multi-bagger potential. And really the thesis there is that execution meets opportunity. Capstone Green has been around for almost 40 years, is the leader in microturbine technology, has about 40% global market share. And what a microturbine is essentially just a gas turbine that's found in power plants shrunken down. So a gas turbine in a power plant is typically 100 megawatts to a couple gigawatts. Capstone creates microturbines on the scale of 65 kilowatts to about 10 megawatts. And so typically their customers, one that couldn't tap into the grid for whatever reason, they were in some remote location, and they could find microturbines because natural gas pipelines are found everywhere in the United States. However, the market has opened up significantly as AI demand has tapped the grid. So their solutions are now seeing an inflection in demand. And so why is this opportunity overlooked? Well, several reasons. It's recently emerged from a prepackaged bankruptcy. There is no coverage, and it recently uplisted to the QX about a month ago. So why did it go into bankruptcy? The previous management team had been around for close to 20 years, and they were just very complacent. They had the wrong strategy along with the lack of financial and operational discipline. So they started chasing growth in international markets, starting expanding their product offerings, and their supply chain complexity swole dramatically. Costs were overrun, inventory was sitting on hands for years at a time. And when they went into bankruptcy and they emerged with a new management team, specifically the CEO, he comes directly from GE and Trane with a lot of experience in turbines. Had a lot of sales and engineering experience, and he's just been able to instill best practices and just grab low-hanging fruit that the previous management team left behind. He instilled an engineering culture. He hired a lot of engineers and operators from aviation companies with a lot of precision engineering experience. And just some results over the last couple of years since he came on board, they've achieved positive adjusted EBITDA for the first time in almost 40 years. So this company was losing significant amounts of capital over the last 40 years. We don't really like the adjusted EBITDA, but we believe in this case it is a good indicator for the progress they've made. Product gross margins have gone from negative 20 to 10%. And they've also pursued rental fleet growth. So rentals are a way for companies that want some type of temporary power solution. It fits those needs as opposed to buying microturbines. So recently, the Capstone has signed MOUs with edge AI infrastructure players and is in talks with other AI infra players to provide their microturbine solutions. So why is now a good time for Capstone Green? Essentially, the grid is tapped. The grid is a very old and congested thing. Transmission lines are akin to like a 2-lane highway when they need to be a 4-lane highway. Lead times for transformers and switchgears are on the order of 1 to 3 years. So just capacity is very constrained, and now all of a sudden you have AI data centers are poised to take about 10% of total US electricity demand by 2030. Then you have other things such as EV penetration. So you had all these cars before that were powered on gasoline, now they need electricity from the grid to run. So just further strain on the grid. So here's some recent headlines. The graph on the left, it's interesting, from the year 2000 to 2020, total US electricity demand has been pretty flat around 4,000 terawatt hours. And that's despite population growth, device growth, and the reason for that is essentially efficiency and offshoring of manufacturing. So appliances have got a lot more efficient, so they need less energy to operate. So really the grid hasn't needed to upscale in the last 2 decades, and now that trajectory is set to change. The graph on the right is gas turbines, so these are the ones that go into power plants. The dotted line shows the current production capacity on a global basis, and you can see everything above that is forecasted demand. So just severe shortage from the generation side to the transmission side for the electric grid. So here are 3 solutions for how data centers get power today. Number 1, if they were lucky enough, they could just rely on the grid completely. Number 2, this is more of a hybrid solution, so they use the grid along with solar and batteries or reciprocating engines, which are essentially diesel engines that use pistons to generate electricity. Number 3, and going forward, what's looking like the most dominant solution is just pure play off-grid solutions. So this is where you hear talks of small modular reactors, fuel cells, and turbines. These are turbines about 50 megawatts on downwards, not the large turbines found in power plants. So why pick microturbines? So there's several advantages today, and the most important one being time to market. So demand has just influxed all these companies. So for larger turbines or for fuel cells, demand is now generating lead times of 12 to 24 months, so extremely far out. Microturbines can be produced on the scale of weeks. Another advantage of microturbines is that they're very low emissions. So all these other ones, you need air permits to operate for 12 to 24 hours a day. The second one is efficiency. So just a standard microturbine is about 30% efficient. However, what's interesting is that you can couple it with things called absorption chillers. And so it captures the waste heat. So much like a light bulb, if you capture the heat from a light bulb and use it to power other things, you would have a much more efficient light bulb. Same thing with a microturbine. So you can capture that waste heat and you can raise the efficiency from 35 to 80%. And that can be used to create very cooled liquid, which is a solution that data centers want more and more with liquid-cooled GPUs. And lastly, they are a very reliable baseline of power. So they're 99.999%, have uptimes of 99.999%. So underpinning all this is AI. So we believe that AI demand is only continuing to get stronger. Models are going to get better, compute is going to get cheaper, and demand is just going to continue to be unlocked. Some graphs here that show monthly tokens processed by Google. So that's how many tokens have been generated. A token is almost one word. So you can see it's 480 trillion in April. It was now almost 1 quadrillion today. And so that's equivalent to about 10,000 Wikipedias being generated a month. And ChatGPT is almost at 1 billion weekly active users. So just significant demand, significant growth from these from AI. And there's the analog of fiber. People are saying this is the next fiber build out, but there are a couple main differences. Number 1, there are no dark GPUs. So you don't see data centers with swaths of GPUs that are dark. In the fiber optic build out, 90% of the fiber laid out was dark. It was not used because they extrapolated that bandwidth was going to be doubling every 100 days, and that simply did not happen. What's interesting about GPUs is that all the hyperscalers can see demand currently, running on the cloud, running on CUDA, so you can see demand as opposed to extrapolating it, what it's going to be a year or 2 years from now. And secondly, hyperscalers, which are the main demand driver, are very well capitalized. They're not levered companies that, if they hit an air pocket of demand, are going to go belly up. So some key differences there. So yeah, we believe for the next few years, we can't speak past 2030. You hear a lot of large numbers being bandied about. We believe those are more goalposts and frameworks as opposed to binding contracts. But we believe for the next few years, AI demand is going to continue to get stronger. So here's a financial snapshot of Capstone. It has a market cap of about 45 million, net debt of about 25 million, and Goldman Sachs, which was the creditor and did a debt for equity swap when it emerged from bankruptcy, has about $32 million in preferreds. It generates revenue about $100 million. So it's trading about, on a fully diluted basis, EV to sales of about 1. So here's where it is, and here's where we think it's going. So it generates about 100 million in revenue, has about 25% gross margins today. We think as they scale into AI demand, as they continue to insource manufacturing, gross margins are going to increase, revenue is going to increase. So we think by 2028, they can reach about 200 million in sales with a blended gross margin of about 40%. With operating leverage, we believe they'll have about 25 to 30 million EBIT by fiscal year 28. So on a fully diluted basis, it's trading about a 3x EV to 28 EBIT. So we see at least 100% upside in the name. Thank you.